In October of 2025, the crypto market didn't just dip, it bled. $19 billion? Gone. Wiped from the accounts of over 1.6 million traders in a single weekend. While human investors were getting liquidated, watching their life savings evaporate. Something else was happening, something hidden in the code. While humans were losing billions, a new breed of trader was making millions. They didn't panic. They didn't sleep. They just traded. These are the AI bots, and this is the story of how they conquered crypto's most cursed month. What I'm about to show you will change how you see this market forever. What's up, everyone? October in the crypto world has a nickname, Uptober. It's historically the month of green candles, optimism, and bull runs. But October of 2025 was different. It was a bloodbath, and it exposed a brutal truth about the modern market. The game has changed. In this deep dive, we're not just going to rehash the news. We're going on a financial investigation. First, we'll dissect the $19 billion crash. What really caused it? Then, the most important part, we'll uncover what the AI bots were doing while the market burned. We'll look at the shocking, real-world performance of models like DeepSeek, Grok, and even GPT-5 in a live trading competition that took place during the crash. And by the end, we'll answer the question that every trader should be asking. Is AI now the only way to win in crypto? And just a quick heads up, this video is packed with data, so I've added chapters in the description. If you want to jump straight to the AI performance results or any other section, feel free to use the timestamps to navigate. Let's get into it. The stage was set for a perfect storm. Bitcoin had just hit an all-time high of around $126,000 on October 6th. Ethereum was soaring. The market sentiment was euphoric. Everyone was expecting another legendary Uptober. Then on Friday, October 10th, the spark. President Donald Trump drops a bombshell on social media, a 100% tariff on all Chinese goods and new export controls on critical software. While the stock market was closed for the weekend, the crypto market, which never sleeps, became the world's pressure release valve. And it exploded. Within hours, the market went into a complete freefall. Bitcoin, which was trading above $122,000, plummeted over 14%. It crashed straight through the psychological $100,000 floor, hitting a low of around $104,782. Ethereum got hit even harder, dropping about 20% to $3,500. But the real carnage was in the altcoins. Solana, Dogecoin, XRP, they didn't just fall, they collapsed, with losses ranging from 40 to 80%. This wasn't a correction. This was the largest single-day liquidation event in the history of cryptocurrency. Over $19.13 billion in leveraged positions. Poof. Gone. 1.6 million traders wiped out. The total crypto market cap lost an estimated $350 billion. So, was this just about a tweet? No. That was just the trigger. The real cause was a bomb that the market had built itself. Excessive leverage. Before the crash, data from firms like Glassnode showed that open interest, basically, the total number of open derivative contracts, had skyrocketed. An insane 87% of those positions were long, meaning almost everyone was betting on the price going up. The market was a powder keg. Here's how the Cascade worked. When Bitcoin's price started to fall, it hit the liquidation price for the most highly leveraged traders. Their positions were automatically sold off by the exchanges. This massive wave of selling pushed the price down even further, which in turn triggered the next wave of liquidations. It was a self-reinforcing death spiral. What made it worse was the evaporation of liquidity. It was a weekend. Market makers, the big players who provide buy and sell orders, pulled their quotes. Market depth on some altcoins collapsed by over 98%. There was simply no one left to buy. This brutal mechanical process is what turned a price dip into a historic market crash. For the human traders caught in this storm, it was pure chaos. Now, before we move on to how the AIs played this, if you're getting value from this breakdown, do me a favor and hit that like button. It tells the YouTube algorithm that this is a quality financial analysis and helps us reach more people. It costs you nothing and means the world to the channel. Let's continue. The human response to a crash is primal. Fear, panic. You see red on the screen and your gut screams, sell. This is what happened to millions. They sold at the bottom, locking in devastating losses. The crypto fear and greed index plunged into extreme fear, a perfect measure of human emotion taking over. But machines don't have emotions. An AI trading bot doesn't feel fear. It doesn't get greedy. It doesn't panic sell. It follows a set of cold, hard, logical rules, 24 hours a day, 7 days a week. While human traders were sleeping or panicking, AI bots were analyzing. They were detecting the early signs of instability. They were calculating risk-reward ratios in microseconds. They were executing thousands of trades, exploiting tiny inefficiencies that no human could ever see. This fundamental difference, human emotion versus machine logic, is the key to understanding what happened next. So, what exactly did these bots do? They deployed several key strategies. First, high-frequency arbitrage. During the crash, the price of Bitcoin was slightly different on Coinbase versus Binance versus Kraken. We're talking fractions of a cent. But AI bots could buy on the cheaper exchange and sell on the more expensive one, thousands of times per second, banking risk-free micro-profits that added up to millions. Second, grid trading. This is a strategy where bots place a grid of buy and sell orders at preset intervals. As the price bounced around violently during the crash, the bots were automatically buying the dips and selling the rips, profiting from the volatility itself instead of being destroyed by it. Third, and most importantly, sentiment analysis and early warning. Advanced AI models were scanning news headlines, social media posts, and even the blockchain itself for shifts in sentiment. They likely detected the surge in negative chatter moments after the Trump announcement and began de-risking before the human herd even realized what was happening. One report from Forbes noted that AI bots, on average, showed a 15 to 25% performance edge over manual traders during the turmoil. And we have concrete proof. Take the case of Cointech2U. During the absolute peak of the crash, while $19 billion were being liquidated, their AI bot reportedly generated a profit of $1.3 million, a 9.8% net return. They were on the other side of the trade, buying from the panic sellers. This wasn't luck. This was strategy, executed at machine speed. But not all AIs are created equal. This is where it gets fascinating. Just after the crash, a competition called Alpha Arena put several of the world's most advanced AI models head-to-head in a real money trading showdown. They gave each AI $10,000 and let them trade crypto perpetuals. The results are shocking. The winners? The models you might not expect. DeepSeek, a model from China, came out on top, posting a profit of over 10% in the first week. Elon Musk's Grok and Anthropic's Claude also performed exceptionally well, with reported gains exceeding 25%. They successfully navigated the post-crash volatility. Now for the losers. This is the part that surprised everyone. Google's Gemini 2.5 Pro lost. It ended the period down about 28%. But the biggest loser, the one everyone expected to dominate? OpenAI's GPT-5. It was a catastrophe. GPT-5 didn't just lose, it got obliterated. It finished with a staggering loss of 39.73%. What does this tell us? It's a critical lesson. An AI being a good chatbot does not make it a good trader. Trading requires specialized models, trained on financial data, with sophisticated risk management. This competition proved that the brand name means nothing. Only the performance matters. What do you think of these results? Did the GPT-5 performance surprise you as much as it surprised me? Let me know your reaction in the comments below. I read every single one. Let's dig deeper into why some AIs won and others failed so spectacularly. The winning models like DeepSeek and Grok demonstrated a key trait: adaptive risk management. They didn't just follow a single strategy. They analyzed the rapidly changing market conditions, the volatility, the liquidity voids, the shifting sentiment, and adjusted their approach in real time. They likely reduced their position sizes during peak chaos and then scaled back in to capture the recovery bounce. GPT-5 and Gemini, on the other hand, likely suffered from overfitting. They may have been trained on historical data from less volatile periods, or perhaps their models, designed for broad language tasks, made them susceptible to false signals in the noisy, chaotic environment of a market crash. A sarcastic tweet or a misleading headline might have been interpreted as a genuine market signal, leading to disastrous trades. This highlights the most important takeaway about AI trading. The quality and specificity of the model is everything. A generic, all-purpose AI is like bringing a Swiss Army knife to a sword fight. You need a dedicated weapon. Platforms like Tickeron, for example, reported impressive annualized returns in 2025 from their specialized financial learning models. One report from August before the crash cited an 85% annualized return on their Ethereum bot. While this wasn't during the crash itself, it shows the power of purpose-built AI in volatile markets. This brings us to the ultimate question. After a $19 billion human catastrophe and a clear demonstration of machine superiority, is manual trading dead? Is AI now the only way to consistently win in crypto? The answer is nuanced. No, manual trading isn't dead, but the role of the manual trader has fundamentally changed. Trying to beat bots at their own game, high-frequency trading, micro-arbitrage is a losing battle. You will lose. But where humans still have an edge is in long-term, thesis-driven investing. An AI can't understand the vision of a project's founder. It can't assess the strength of a developer community. It can't make a multi-year bet on a paradigm-shifting technology based on qualitative conviction. That's where the human mind, for now, remains supreme. The future of successful trading is likely a hybrid model, the centaur. This is where a human trader sets the overarching strategy. I believe in the long-term potential of Ethereum and decentralized AI projects, and then deploys a specialized AI bot to execute that strategy. The human handles the what and the why, while the AI handles the when and the how, managing entries, exits, and risk with a machine-like discipline. By 2025, projections showed that AI was already on track to handle nearly 89% of global trading volume. The October crash didn't start this trend, it just proved its inevitability. So, what does this all mean for you? The lessons from crypto's cursed month are clear, and they form a new playbook for surviving and thriving. First, respect leverage. The $19 billion liquidation is a permanent scar on the market, a brutal reminder that high leverage is a weapon that can and will backfire. Second, acknowledge AI's dominance. The bots are here, and they are better at short-term trading than you are. Don't fight them. Use them. Explore platforms like 3 Commas, Crypto Hopper, or others that fit your strategy. Start small, learn how they work, and let them handle the emotional discipline for you. Third, become the strategist. Your greatest asset is no longer your ability to click buy or sell faster than the next person. It's your ability to think critically, to do deep research, and to form a long-term investment thesis that a machine can't. The era of the purely emotional, gut-feeling trader is over. It was wiped out in October of 2025. The future belongs to the informed, strategic investor who understands how to partner with technology instead of competing against it. The market has evolved. It's time your strategy did too. If this analysis helped you understand the new rules of the game, make sure you're subscribed with notifications on. We go deep on the financial trends that matter so you can stay ahead. Thanks for watching.